Hello ladies and gentlemen, welcome back to YouTube, and in today's video I'm going to be showing you how to use the commitment of traders report in your analysis to give you more edge within the market. Now, as you may know, the commitment of traders report is simply a report that shows how much positions institutions, the commercial and non-commercials, are holding within the market at every given point in time. Now, the CFTC, the Commodity Futures Trading Commission, I believe that's its full meaning, requires that institutions, big institutions, submit a report of how much positions they are holding on every asset on a weekly basis. So of course, this report that they submit gives us an opportunity to be able to see how much of each asset they are holding. With that, we can see how much they are holding net long or how much they are holding net short. So that's exactly what the commitment of traders report seeks to examine. And of course, in this video, I'm going to be showing you how to use that commitment of traders report in your technical analysis. And of course, I am going to equally be analyzing the market as well. I'm going to be looking at, of course, USDCAD like I have behind me here. Of course, I'm going to be looking at NZDUSD as well. And I'm going to be using the commitment of traders report in these two analyses. So please make sure you stick around. And of course, if you haven't subscribed yet, please give this, please subscribe and give this video a like, share with your friends. The knowledge we share here is, completely invaluable. So make sure that you stay in the loop of things by subscribing and turning on post notifications so that whenever we upload new video, of course, you get a notification of that and you come and check out what we have to give you. So right now we're going to dive into the screen and I can't wait to show you how to use the commitment of traders report. Let's go. All right, guys. So remember, we are now talking about the commitment of traders report. And for me to talk about the commitment of traders report, I have to analyze the market and then I have to, use the commitment of traders report for you in an analysis and then show you how it is done. So right now we're going to look at USDCAD, which was the last analysis that I shared here on YouTube, where I was, talking about the market having taken this low and of course having made this run to the downside. I was expecting a market that would trade up all the way to these highs and possibly continue all the way to these highs here. But now on Friday, Jerome Powell came out and spoke and said that it was time for monetary policy to adjust, meaning that he hinted at interest rate cuts come September. And of course, in Canada, of course, we expect some rate cuts in Canada as well. But right now, all eyes on the dollar. And that information alone had the market take off to the downside. You can see the dollar collapsed. And if we look at NZDCAD and a host of other pairs, there was a very massive run, against the dollar. All right. So now we're going to be looking at USDCAD and of course the potential situation that we have in our hands. So given the fact that yes, it's been hinted that monetary policy is likely to adjust from the Fed, and we now have this very aggressive impulsive run to the downside. This right here is a clear break in market structure on the weekly standpoint. However, if we are going to go short this particular asset, if we're going to go short this particular asset, these will be the target lows. We have these areas here around 1.30922 would be the target lows. Maybe from here, we could expect the push to the upside or whatever. But from here, the next thing that we're likely to see is we're expecting a market that will trade from here all the way to these lows. But for us to get there in the first place, we need a handful of a few things. We're going to need to see the Canadian dollar get stronger. That means we're going to see the negative net positioning we have on the commitment of traders report right now reduce aggressively. And remember, this is now a shift in market structure. So if we take from the high to the low, and we're looking at, let's say we're looking at this as a Fibonacci level, or we're looking at the discount on premium pricing, we are going to need to see a market that at least pulls back deep enough to give us some, some area to be able to get into the trade. So we have this move from here to here. We need to see a pullback at least into 50% discount or maybe into all of these zones again. From there, we can begin to look for the shorts or the sells to the downside. And of course, if for any reason the market invalidates this and trades above, then we're going to be looking at the inverse of that to actually continue the trade to the upside. But for me personally, when I see this type of moves, I don't like to get involved in areas like this. I like to see a pullback at least into 50%. Then we begin to go short on the asset. But of course, we're going to dive into the commitment of traders report and we're going to look at that in just a bit. So right now we've taken this low, structure broken, expecting a pullback, and then from there we can actually begin to trade to the downside, and of course begin to, you know, take out all of these lows here and all of these lows. I mean, if you get here, no matter what the news says, you want to be looking for opportunities to buy. I mean, these are lows, and all of these areas here, you want to be looking for opportunities to buy. At least maybe expect to pull back from these areas before we continue the trade to the downside. So a quick look at the commitment of traders reports. Just load that up a bit. So here, this is the commitment of traders report. So here, this is the commitment of traders reports. We have the date of the release. Of course, this comes out every week, so it's usually there's a 7 days interval here. I mean, sometimes these things change. I don't even know why that happens, but we have the date. The long here means the number of positions that they are holding long. Of course, now remember, this is our own format that we use internally at Chicodo Trading Academy. If you want to go and look at it on the CFTC website, or you want to go and look at it on the Trading Star, all of these places where we get them from, yeah, you can go and look at it there. But remember that we have made this our own. We have made this in such a way that it is easy for the students to use, and of course this is updated automatically by the team. All right, so we have 15,948 longs against 26,721 longs. This is on NZDCAD, so we're going to quickly, this is on NZD, and I want you to understand that if we are looking at the commitment of traders report, all of these pairs, we have Aussie, CAD, Swiss, this is the dollar itself, Euro, Pound, Japanese yen, NZD, silver, and gold. All of this, they are all traded against the US dollar, because I mean every currency on the spot is traded against the dollar. So when you're looking at any of these things here, just know that you're looking at that particular asset against the dollar. So if you're looking at AUD, commitment of traders reports, you are looking at AUD USD, and if you're looking at CAD, you're looking at USDCAD. So you need to have that at the back of your mind when you're looking at the commitment of traders report. So looking at CAD here, we have remember, we have the first column is for the number of longs. That means the buys that they have. And if we are net long, that means if it means we are net long, it simply means that we have more longs than shorts. So if we take the long, for instance, here at this level here, we have 46,414 longs against 30,645 longs. If we subtract the shorts, which is the sells, from the longs, then we are going to have 15,769. So it's green, showing that the longs are more than the shorts. So the buys are more than the sells. So if we are looking at that type of situation, we want to see, okay, is there a huge margin between the longs and the shorts? If the margin between the long and the short is huge, then we know that, okay, yes, the market is in a very strong uptrend, and then what we're going to be looking for is we're going to be looking for pullbacks within that uptrend using technical analysis to buy, because we know that institutions are actually net long the asset. All right. So looking at this particular scenario here, you could see how we use this is we had a situation where the markets, all of these areas from here, you had the market, all of these areas was net positive. So it was net long here, and then suddenly they began to shift from net long to net short. So that means the sells began to become more than the longs. You can see here 48,000 sells against 37,000 sells, 37,000 buys. We have 48,000 sells against 35,000 buys. So you could see the net long, now it's red. It was green here because the buys were more, but now it's red. I mean, this is how we structured it to look like, for the students, so that, it's easy for their eyes and all that. So you can see how currently we have 91,000. We went from 91,000 here, minus 91,000, all the way to minus 181,000. Now, what this tells you is that the CAD is weak. So because what this is simply saying is that investors are selling the CAD more than they are buying it. So you have 200,000 sells against 20,000 buys. So definitely it means they are shorting the asset very, very aggressively. And of course, the CAD is meant to be weak. But what that is going to do is, because USDCAD is traded as a quote currency instead of a base currency, if you head over to USDCAD, what it's supposed to mean is that USDCAD is supposed to be heading up, because the CAD is extremely weak. So it means USDCAD is going to be trading to the upside, because we have a very net negative positioning against it. So now you can see recently we went from 181,000 down to minus 164,000. And what was really going on was that institutions have started closing the sells. You can see here the added buys, the added sells. When this side is green, when the sell side of the commitment of traders report is green, it simply means they added sells. That means they sold more. So this is, they added 34,299 more sells, and here they closed 361 longs. When it's red, it means they are closing the sells or the buys, and when it's green, it means they are adding sells or they are adding buys. Just like here, they added 4,471 buys and added 25,732 sells. That means they opened more sell positions on the card, now leading us to have very, very huge numbers. Now, these numbers, this is where manipulation really comes into this thing. This is how they manipulate the numbers. So sometimes you could see institutions, they are closing the buys, they are closing some of the buys and closing some of the buys, but they are not adding new sells. When you see them closing buys and closing buys and closing buys, and they're not adding new sells, it tells you something. They are trying to take profit on their position. They are taking profit, and that's exactly why they are not adding any new positions. So, but when you see a situation where the institutions have started, they are closing the buys and they are adding sells, they are closing the buys and they are adding sells, they want to go net short. They want to go net short. So, and the asset is about to weaken. So that is exactly how you look at some of these numbers. So when you're looking at a situation where buys are being added, shorts are not being closed, buys are being added, shorts are not being closed, they're holding on to their short position, of course, definitely it tells you that they've shorted the asset so much and now they're taking some of the profit. And then what's going to happen is the market is going to turn around for a little bit before, we continue in the given direction that we have. So using this illustration and having this at the back of your mind, one thing you now have to know is, yes, USDCAD, we went from minus 80,000 all the way here by May 14. Now we are at minus 164,000. So it goes a long way to tell you that for this to really, really turn around, we are going to see more sells get added, more sells get added, more sells get added. You can see them adding very small longs. You can see them still adding very, very small longs on the card. And guess what? They are you see them closing very short, small longs, and now here they are still closing a lot of the sells, but they are closing far more sells than the longs that they are closing. But then the thing is, no longs have been added just yet, so the card is not showing any sign of strength. This is the last report that came out on the 20th. So instead, 16,000 sells were closed. So naturally it goes a long way to tell you that with all these sells that just got closed recently, if we head over here, there is a good chance that this market right here is going to make some turnaround, at least into all of these areas, before we see any type of shorting. So, this is a very big drop to the downside. Not any reason for anybody to panic. Doesn't invalidate the setup yet, because the report still shows us that we absolutely have more and more sales getting closed. And if we have this type of big sales getting closed, definitely the market is going to turn around. But we saw this here from last week when the news came out, and it looked as if the market was going to go to hell, and the market just closed here. So this is how you want to have it at the back of your mind. So regardless, we have this move from here, this high to this low. Definitely we still need to get a pullback. By the time we start cutting the rates, then we see what the market will do. All right. So, and of course, remember that Canada still has a rate cut coming next week. And of course, the Canadian dollar, Canada has less interest than America. So you want to, keep that at the back of your mind. And of course, at the long run, the dollar is likely to actually get far stronger than the Canadian dollar. So, but for now, let us trade the pullback of this. And if the institutions begin to now add more shorts, then we'll begin to look to see if we're going to get to these lows or get to these lows, depending on what the market will do. And when the rate cuts come out next week, we'll be keeping our eyes on those ones as well. So this is an era where the fundamentals are going to be playing a very, very key role, especially with interest rates on the horizon. Okay, so let's keep that in mind and head over to the NZDCAD and the NZDUSD, and equally now use the commitment of traders report to analyze that as well. So while we're at it, gentlemen, if you have any pair you'd like us to look at, please leave that as a comment in the description. I'll be more than happy to make that video, for you. So this one was actually by, I think it's EB Paris or Gibby Paris, that suggested, the commitment of traders report. So a very big thank you to EB for, to Gibby for making that suggestion as well. So now we have NZDUSD, clear direction. We ran through this low, took sell side liquidity, and the market has taken off very aggressively. But if you understand the school of thought that I come from in trading, you know that I'm always looking out for liquidity levels. You can see how we had liquidity here. Everything you see here marked out on the chart is areas of liquidity. So we've taken this high, At some point, one thing that we're sure of is that we're likely to get some pullback. And if we do get that pullback, where does that leave us? That leaves us at a point where we are likely to see the market continue in this upward momentum, at least up until these areas. And what is likely to fuel this up move on NZDUSD? That means, of course, we are going to expect a weak dollar. One thing that is likely to fuel this is the upcoming rate cuts that we have coming very, very soon. So if the rates are going to get cut in September, that's coming next month. I mean, it's so close by. If we're going to have the rate cuts, then automatically the market is going to take off very, very aggressively to the upside. And we're going to have the market running through all of these areas of liquidity here. We're going to have the market running through all of these. And this will provide lots and lots of buying opportunity from here. All right. So you want to keep that at the back of your mind. And let us head over here to the daily time frame. Because the ultimate way to actually look at this is top-down analysis. So if we take this one out and we just leave that highlighted there. So we have this area. The market has cleared that. The market has equally cleared this. One thing I like to see in this area is normally how I would be looking at this is we have a very aggressive impulse from here to here, right? Very big impulse, strong impulsive candle. And the last high that got taken out before all of these ones here was on this side of the market. So, and that is, really, really resting at the 62% retracement level, which is the optimal trade entry level as well. So we have that resting at the 62% level. So one thing is for sure, I would like to see a situation where we get some decent pullback into all of these zones, and that provides us with enough opportunity to be able to get long, to trade the market from these lows here, all the way from here to these areas, long term. All right. So that's exactly what we're going to be looking at, in the long run. So we're going to be looking at it, pull back into this zone from here. We rally all the way to these highs. This is, personally my ideal scenario, but then I don't control the markets. Anything can happen, but the idea is to wait for the market to actually pull back. That will be the optimal trading entry, for the market to pull back into all of these zones. And then from here, we get long into all of these areas. So let's head over to the COT report and see what we can make of it. Now, for every single one, we move over to the NZD again. And what do we have? So you can see for sure that we've come from minus 2,000. We've come from minus 2,000. That was in May, on the 28th of May. Now we're at we had plus 2,000 here, 2,046 net positive positioning to 13,716 net negative positioning. So you might say this is net negative. So where does that leave us? Where that leaves us is very simple. It leaves us at a place where it tells you that all of this net negative positioning here, I want you to pay attention to what is really going on. The institutions, remember, this is the long, this is the short. And this is the change long, and this is the change short. So remember that you could see from here, they closed 3,500 buys and added 1,329 shorts. So they kept on closing the longs and adding shorts, closing the longs and adding the shorts, closing the longs and adding the shorts. So all these while that you see the institutions doing that. And then here, you could see that they added 1,000 in the most recent price action. They added 1,837 longs and closed what? They closed only 18 sells. But meanwhile here, they kept on closing all the buys, and now here they kept on still closing all the sells. That is, of course, after adding 13,014 shorts to the equation. Now we have a net negative position here. If we have a net negative position here in most recent data, so we have 1, 2, 3, 4. So over the past 4 weeks, we have had a net negative position. But then guess what? On the technical side of the market is very much bullish, is very much looking upwards. It tells you one thing. This market, even as aggressive as it looks, because all these things don't get priced in immediately, even as aggressive as it looks to the upside, just take a look at from here to here, very, very aggressive move. All of these moves, very, very aggressive. Even as aggressive as it looks to the upside, it is telling us one thing. This market at some point is going to sell off, because the market is going to eventually reflect all of those institutional sells that we are beginning to see. So one thing you have to understand is that this thing does not tell you what is going on immediately. It gives you a clue as to how institutions are unloading and offloading. And if you are seeing a net negative net position and the asset is all the way at the highs, it's very, very bullish, it has traded very aggressively to the upside, it goes a long way to tell you that all those net negative positions is going to come in at some point. Maybe the market trades up here and that begins a pullback for the market to the downside. And of course, by the time the market now gets here, somewhere here, what do the institutions begin to do? They begin to accumulate, they begin to close some of the sells, and they begin to add some of the buys. And as they add all the buys, the market is going to still be somewhere here consolidating. They add and add and add and add. The market is in these areas, it's consolidating, and it's not reflecting on the chart here that institutions are loading up on the buys. But then guess what? One catalyst comes out, because what usually happens is the institutions hold all these positions, and then some catalyst comes out. And catalysts like when I'm saying catalyst, I'm talking about something like interest rate decision, CPI, all of these numbers. It comes out, and the positions that they have been holding all the way from here now explodes to the upside. And when it explodes, you are now looking at it. The market now gets to these areas. They begin to close some of those trades. They begin to close some of them. And you, on the retail side, you are still looking at it that the market is long, that the market is trading up, is going up. But no, the institutions have bought somewhere in here. And at this level, what they're simply going to be doing is closing some of those positions, even while it looks big. And as they begin to close some of those positions, you look at it that, okay, yes, the institutions are now net long on they are now net long on the asset, because it's all green and all of those things. And guess what? The market begins to pull back, and they get here, they begin to buy again. Instead, you are now seeing all the red that they used to actually send this down here on. They were taking profit, but meanwhile now they are here, the institutions are buying, and it's about to go up again. So when you're looking at the commitment of traders report, you have to understand that yes, we are very aggressive. This is net short, but price of the assets is actually has traded up very aggressively. And then you're looking at the COT report, and it's showing you that is net short. But at the end of the day, you have to understand that is eventually going to reflect in further price action. It does not reflect immediately. So that is exactly how we use all of these things here. And I hope this helps you. So of course, if you have any question, please leave them in the comment once again. I hope this video has helped you. If you have any question, please leave them in the comments. I'll be more than happy to make another video about all of this. And of course, if you have any questions regarding the COT reports, any observations, anything you don't understand about the COT report, please leave a message behind, and I'll be more than happy to make a video about that and equally assist you as well. So please don't forget to like, share, and subscribe, and I will see you in the next video. Cheers.